So there's a lot of situations where you can help everybody win, right? Seller wins, buyer wins, and then obviously when transaction is consummated, the broker wins as well.
Welcome to the Apartment Investing Journey, where we explore every facet of multifamily investing and development with top investors, brokers, and service providers who share their strategies, successes, and secrets to help you on your apartment investing journey.
Hey guys, welcome to the Apartment Investing Journey. I'm David Robinson, and I am excited about our guest today on the show, a good friend of mine, Brock Zylstra. Brock, welcome to the show, man.
Thanks for having me on.
Yeah, a little bit about Brock. Brock is a commercial real estate broker specializing in the acquisition and disposition of multifamily and student housing properties. He's a member of the multifamily team out of the Marcus and Millichap office in Salt Lake City, Utah. The team has collectively helped facilitate over $1.3 billion worth of property value over the past several years, and they are one of the top multifamily teams in the state of Utah and Idaho. Brock attended Brigham Young University and graduated with a degree in recreation management and a minor in business. While attending BYU, Brock played on the men's basketball team. He was a member of the team that went to the Sweet 16 in 2010-2011 season. Brock's also an active investor and has invested in over 10 properties, over 500 units in Utah and Idaho. So, Brock, if you can, take a minute and just tell us a little bit more about yourself and your current focus.
Yeah, so like you said, thanks, Dave. Like you said, me and my partner here and our team, at Marcus and Millichap, we focus primarily on multifamily and the big umbrella of multifamily. So you have conventional, you have affordable, tax credit, student housing, and seniors housing that fall under that umbrella of multifamily. And we've sold a property in each of those product types, but our main focus and what we do our most business in is just conventional multifamily, and then probably our second most is student housing all throughout, like you said, Utah and Idaho. I started in 2013, so into my 7th year, I think now, so finished 6th and into my 7th year. And I'm loving it. I think I started at a good time about 7 years ago where the market was on the up, right? It had the fall in 08, 09, and I started in 13 where things were obviously trending in the right direction for owners and even buyers. Anybody who bought, investors who bought multifamily in 2013, 14, 15, obviously now have done really well for themselves. So it's been a very hot market. And then obviously being fortunate enough to be in the Salt Lake City market, where a lot of eyes across the country are on this market. We might get into this later, but I think that 85-90% of our buyers here in Salt Lake are from the coastal market. So you have majority in LA, San Francisco, so California coastal markets, and then Seattle, to Washington, and then also on the East Coast we get some buyers too from Florida and New York. So a little bit about myself, and last year alone we did I think $500 million in multifamily sales, and I think that equated to about 23 deals of 100 or more units. So
wow, that's great. So if we can, let's go back to where you decided to get into the commercial multifamily brokerage space. Like, what caused you to go that direction? Why not another asset class? Walk us through that decision at that point in your life.
Yeah, so at the time I made the decision, I was obviously coming out of my senior year and played basketball at BYU, and I kind of fell into it a little bit. I'm glad I did. It's been a great journey. I think that I had a small. Me and my brothers bought while I was in going to BYU. We bought a few like duplexes down in Provo, and that was in the time where you could put down basically very minimal. You still can, but very minimal amount of money, and even get like a rebate if it was your personal residence. So anyways, we did that, and I liked that aspect of not having a home, right? It was more of a home as an investment. So we had a few, I think we had a total of 3 properties, 2 in each. So it was 6 residents. six tenants living in those buildings. So I like that. I'd never really look at, okay, I want to do this for, for an occupation down the road. But when I was approached by an individual from Marks and Millichap, it kind of got the wheels turning, and I started to really dive into it and loved it. And then there was just an opportunity. I went and looked around because I felt that being mentored when you first entered the business was very helpful. Looked at some of the individuals who weren't mentored as opposed to guys that were mentored, and the individuals who were mentored obviously had more success from what I was seeing in my infancy of looking at the business. And so my partner now, obviously I got along great with him from the start and felt like we clicked pretty well. I went actually down, so that was here in Salt Lake. I went down back to where I'm from in Southern California and interviewed at Marcus and Millichap down in their Ontario office. And I just felt like this was a better fit for me, and obviously a better lifestyle, probably affordable compared to Southern California for my family. So it just made a lot of sense. Like I said, kind of fell into it. But out of all the options that I had coming out of school, I felt like the risk with this would probably pay off more in the long run. So I've been very happy over the last 6-7 years to do this.
Yeah, your timing was impeccable, and obviously you didn't have a lot of control over that, but that worked out great for you. And then the fact that you started things off with a mentor and then grew into that partnership with, so if I understand you correctly, your current partner was your mentor when you first started, and you grew into that relationship. Is that right? Yeah,
and that's what I think is the best way to do it. Not everybody does it that way, but if you trust each other, right, and you feel like you guys are aligned in your plans and visions, then I think that's the best way, because then it's something like it just organically gets there, and that's what's happened with us. So he was huge for me. His name is Danny Shin. He was huge for me early on. A mentor, right, will go on your first meetings with you and help you underwrite properties, right? There's a lot that goes into the financial models of any investment property, but multifamily, the nuances of that, he helped obviously tremendously. And so, yeah, it's good to have that grow, this partnership kind of grow organically, as I understood. I still have a long ways to go, but as we're kind of learning through this whole process, it's been great.
Great. So if you can, maybe just talk to us about the general state of the commercial multifamily market. Here in Utah, the market's very strong, and yet there's still a lot of discussion about that we may be near the peak of a cycle in not only residential, but also in the commercial and multifamily space. What are your thoughts on that?
Yeah, so Salt Lake, if you're following, like, all these reports come out, right? Forbes or Fox or, all these different publications will come out with rankings of some sort or the other, whether it's affordability or job growth or employment growth or rent growth, particularly for multifamily. I would say all, right? All of these reports that come out, Salt Lake is definitely on the top 10, right? And these are good signs, right? Top 10
right.
of almost every report that comes out, and usually top 5, and then have been 1 or 2 on a lot of these reports. So Salt Lake fundamentally has been strong year over year for the past few decades, and even in the recession, our occupancy levels, where a lot of the country was hit for, they were down 80% occupied, 75, and some actually were worse than that. But the lowest on average that Salt Lake got was right around 90% occupied. So it's been strong. The only concern now that people are bringing up is just the supply that's coming on, which is a lot compared to what we've seen in the past. As I pull reports, right? We pull reports weekly or every other week, just looking at some of the construction trends, and things are slowing down as far as permits being pulled. But even if things kept going the way that they are, the population growth that Utah is supposed to experience over the next decade, 15 years, should absorb all of these units coming online. So that's not really a huge concern from us. There might be a little minor dip in occupancy over the next few years, but we're at 96 95% right now. And so if it goes 94, it's still not a huge hit on our overall occupancy for multifamily. But it's as I expressed earlier, is most of these investors that are coming in and purchasing in Salt Lake are either big institutions or private high net worth individuals out of these coastal markets who have been affected by some of these law changes in their markets where they have rent control, which is causing some big worry out in California and Washington. And they're coming here because the spread on their returns, right? What they can buy, the replacement, what they can buy in Salt Lake is obviously a lot higher of a return than what they can get over in Southern California or Northern California, where you're probably buying at a 2-3 cap, where over here you can get on even a brand new core asset, you're just under a 5 cap on your purchase price. So like I said, it's the state of the market. I think that I don't disagree that maybe we're at the top or maybe even on the backside here a little bit, but I don't see a huge dip in the country and nationwide, but also not in Salt Lake especially. So
Gotcha.
I think the fundamentals here are still very strong.
That's great. And that's good to hear. And historically speaking, multifamily is one of the best asset classes to be in, even during recession times. And so there is a lot of construction going on, especially here in Utah, a lot of new development. And yet, as far as asset classes are concerned, my understanding is that the commercial multifamily is one of the best places to be, even when things do start to slow down. Yeah.
And I think there's different product types that get hit usually. Like there's some telltale signs, right? That we're maybe hitting a little bit of a dip, and apartments are usually the last to get hit. Multifamily is the last to get hit, or one of the last product types to get hit. Usually the first one to experience some sort of turbulence is hospitality, so hotels, which are usually very seasonal. And I don't even know if they've hit any turbulence as of yet across. I mean, I can speak for Salt Lake City and Utah as a whole. I don't know across the country, but.
Well, I want to just chat about the biggest challenges that you're facing as a broker right now. What are the biggest challenges that brokers are facing in the multifamily space at this point in time in the market?
Yeah, so the first thing that comes to mind, I think, is, and this is probably always an issue, right? So price expectations of sellers and buyers, right? And it's a very strange matchmaking that you do in the investment realm of brokerage, because you're convincing one individual to sell and how it's the right time to sell this asset, but then convincing another group or individual that it's the right time to buy, to purchase. And so to align those, and I think that both can be winners, right? They both can be winners, and it can both be a good time to buy and a good time to sell in different situations. In almost every situation, but it's helping sellers realize that the expectation of maybe where they thought they could sell, whether that's high or low, helping them understand why it is high or low, and helping the buyers understand the opportunity in place with this particular asset that you're trying to sell them. And so that one first comes to mind, right? Just expectations, aligning buyer and seller's expectations. And then what we touched on earlier was the supply. So helping investors understand that the supply that's coming online, it's more than what Salt Lake has seen historically over the last few decades, but in comparison to markets that are like a Denver or a Phoenix, we actually pale in comparison to the amount of units that are coming online. And those markets are larger, but if you take apples to apples, we still are low for what our population growth should be. So our absorption rate has been strong and will be strong, and will continue to move that way, even with the new units coming online. But it's helping buyers understand that, our supply is coming online, but helping them realize that that's not going to affect your investment hold period in the next 5, 7, 10 years from now.
Yeah, that's an interesting dynamic, brokering between both buyer and seller. And what percentage of your transactions do you represent both buyer and seller in the same transaction? 90+%. So I think that, and that's probably the
cycle dependent, right? Right now things are pretty hot, and so I think most buyers look at if you list. So the name of the game is to try and list the properties, right? You represent the seller in the listing aspect of it, and so most buying groups, most purchasing groups want to feel like they have an in, not that they have an in, but they want to work directly with the listing broker so they feel like they're ahead of the game in a sense, right? So
Right.
most of our transactions are what you would say, I guess, double-ended, or the buyers would come in and have non-representation. So they'd come in and just represent themselves and purchase that way.
And you touched on this a little bit earlier, but the unique thing about multifamily, commercial multifamily in particular, is the ability to structure a win-win-win relationship where, depending upon the circumstance, it's a win for the seller, win for the buyer, and win for the broker, and everybody comes out on top because of the needs of the individuals at that point in time in a particular deal.
Yeah. So I think that, like, for example, and this isn't every situation, but there was a group that we approached, and this transaction happened last year, about 200 units, and they had run out of their depreciation. So on your taxes, you have in multifamily, you have 27 and a half years to write off the value of your property. So each year in your taxes, you get a pretty healthy chunk that you can take off of your bottom line. And so once you hit that 27, 28, 30-year time window, you're not getting that advantage of writing off depreciation. And so in this particular transaction, the buyer had been about 30 years, or maybe it was even more than 30 years. So we helped them understand that you selling now, even if this didn't happen, but even if they went into another project that maybe cash flowed them a few $1,000s less, they could restart their depreciation and actually take advantage of a huge opportunity they were losing each year. And so that dynamic, right, understanding that type of the ins and outs of that and educating the sellers and the buyers. So great win for the buyer. They felt like they could come in and renovate some units and get some rental increases, but also the seller was looking at, okay, I can restart my depreciation if I buy another asset, so I can 1031 exchange my funds, my proceeds from this sale, not pay any taxes, right, defer the taxes to a later time, move those funds into another transaction, and then restart their depreciation over. Was huge for them, right? Huge. Yeah. Even if they sold the they didn't, but even if they sold the property for $1 million less than they could have, or the market would have bore,
the tax advantages,
right? Yeah. So situations like that, right, where and then funds, right? Funds. These bigger groups that have funds, they have to place a certain amount of equity every year into certain markets and have different buckets of capital, whether it's an affordable bucket or a conventional bucket, and helping them place those funds, and then realizing that their hold period is usually 5 to 7 years, and they can realize those gains for their investors. So there's a lot of situations where you can help everybody win, right? Seller wins, buyer wins, and then obviously when transaction is consummated, the broker wins as well.
Yeah, that's great. Let's maybe transition a little bit. Let me pose it to you this way. Let's say that we have a syndication group out of state that's looking to come into Utah and make a purchase. Deal flow is one of the biggest challenges for those investors, and finding the right opportunity.
Especially Utah.
What's important to you, if you don't already have a relationship, for you to feel comfortable putting someone on notice on a new listing that is coming on the market? What are you looking for, or do you already have your preferred buyers who you would turn to first? And what would a new buyer need to do in order to get your attention?
Great question. So I think that understanding, having the syndicator or that group articulate to us their equity and how strong their equity is, whether it's we've done X amount of deals out of state, or here's a proof of funds that we have sitting in our account that are X amount of millions of dollars, and here's how strong we are, is big for us, right? Because that shows us that I'm capable of, or my equity and myself, our group, are very capable at acquiring this deal and getting everything, all our ducks in a row to get this transaction done. And we pride ourselves, Danny and myself, pride ourselves on not going to our, 5, 6 guys that we do deals with, we like to bring fresh new capital into the market. I think it's good for the market. I think that it provides expertise and professionalism from other markets that are maybe more mature than ours that help our market kind of get going a little bit. And so we like bringing new capital in. We brought, I think so, when I first started, we had, this is a crazy story, but we had a buyer come in from Washington, and they paid the highest price per unit out of any property, any apartment in the state of Utah in 2013. That was $176,000, $175,000 a door. Now, right, and everybody thought they were crazy. We brought them in. They showed us, they helped us feel comfortable with their underwriting and their capital and what bank they were going to use, and they acquired the asset. And now, so fast forward 6 years from now, our high watermark for price per unit in the next couple of weeks is probably going to be $340,000 a unit. So I mean, that's just part like market growth and I think where our rents are going, but we're not afraid of getting new fresh blood in here as long as they can articulate to us how strong their equity and their group is. Then I think that's probably the main thing for us is if they're capable, then we're willing to work with them.
That's great. So experience and demonstrating their strength and their ability to actually perform.
Yep, perfect.
What is it that an investor or an asset owner should be looking for in a good broker, in your opinion? Maybe they're getting to a place where they need to consider selling an asset and moving into something else. What is it, in your opinion, that sets a good broker apart from the rest that property owners or investors should be looking for?
Yeah, I think actually is pretty similar to what we just talked about on the investor side, is a broker who is going to do what they say and I think is honest with you. So that's a tricky word, right? Because salesmen maybe don't always have the great reputation of being honest, but helping them realize that, yeah, we could price this $10 million property at $15 million, but is that going to do you any favors? No, you're going to limit the eyes that actually see the property, and you're not going to have that competitive environment that drives prices up. And then track record is big too, right? I think that the more you do, the more transactions that you consummate is going to open up the pool of buyers that they have, right? So if you have, for instance, we did 20 plus deals last year, right? So we had 20 plus deals over 100 units a piece, where we probably had anywhere from some of our really popular assets, we had over 100 CAs signed and 60 tours and 30 offers, right? So just that deal alone, we saw and talked with and discussed and helped these buyers understand that the Salt Lake market, and then times that by 20, right? So then you have a lot of buyers, and obviously the most buyers that you're in contact with, the higher probability and higher, or the more amount of eyes that are on the asset being sold by this particular investor. So you want to be able to have your reach, as wide as possible, to cast that net as wide as possible, to have all these qualified groups looking at the asset.
The amount of experience, number of deals, all that's going to turn into a better opportunity for the seller. And having that relationship with a good broker that has a big network, that has experience to advise them appropriately, and ultimately to get as many eyes on the property as you possibly can. How many of your deals do you post to some of these broader sites like a CoStar or LoopNet versus just selling in-house through your network?
Yeah, so that's probably deal by deal. What is big for us too is we will spend money up front to have, right, like I said, all those things that we talked about earlier about the qualified buyers and casting our net. Very targeted though, right? We want to cast our net. We want to be targeted. We want to make sure that these guys are all qualified and they've had this track record of buying thousands of units across the country, and they can do it. And so we'll spend on some of these bigger assets, we'll spend $7,000 to $8,000 alone just to put it on one program that we know has brought success to us. And obviously we'll spend another few $1,000s on marketing material. So it's all dependent, right? So we will use maybe a LoopNet or a CoStar on some of the smaller assets where you're going to get more like a 1031 exchange buyers, like the smaller individuals. Maybe they have a couple $1 million and they want to buy a $5 million deal. And we have a guy on our team who deals with that day in and day out. And so it's all dependent, right? It all dependent on what we're selling.
That's great. Well, I want to dive into sort of our rapid fire questions here. I've got 3 questions for you. I just want your knee-jerk gut reaction to them. You ready?
Yep.
Okay. What is the biggest mistake you've made during your apartment investing journey so far?
On the investment side?
Sure, or the brokerage side.
Yeah, brokerage side, I think that probably first thing that comes to mind is calling a group that was probably out of my range. So calling like an institution or a fund when I was early on and just not being able to speak the language as well as I could have.
Gotcha.
Was able to.
That's a good one. What's the biggest win you've had on your apartment investing journey so far?
So actually just recently my partner and I, our team, we secured a $150+ million listing that we have a call for offers date on Thursday. So all new assets, about 8 properties from a local developer. So that's been a big win recently. We've had a lot, right? It's been a good market, but that's one that first comes to mind.
That's cool. Great. And then what's the best advice you have for someone who's just starting their apartment investing journey?
So on one end, right, if you're starting to brokerage as an agent, I would say just put your head down and work. I remember sitting in my bed multiple times because it takes, right, the process of getting a deal listed and then sold could be a quite a long process. And so I say put your head down and get to work. I remember sitting up looking at my ceiling many nights and just thinking, what am I doing? Right? I didn't make a dollar until my 13th month. So and then on the investment side, I would say look at right now, I think the opportunities are more so on finding submarkets that you can create value. So whether you put in money or change a management company or change just a direction of who you're marketing to from a tenant base, I think understanding the intricacies of that exact submarket for the property goes a long way.
And then lastly, how can any of the listeners connect with you? What's the best way to get in touch?
So my email is Brock, so BROCK Zylstra, ZYLSTRA at marcusmillichap.com or office line 801-736-2628. And we're happy to talk to anybody who wants to sell or buy, right? We're open to everybody. And I think Salt Lake obviously is a hot market right now, and there are good reasons why.
Great. Well, we'll have that contact info in the show notes. Brock, thank you so much for coming on, sharing your time, sharing your thoughts and your expertise, and hope to connect with you soon.
Yeah, thanks, Dave. I appreciate it.
All right. Talk to you later. Hey, guys, thank you so much for joining me today. If you liked this episode, please take a quick second and hit that subscribe button. Even better, leave a quick review. This helps our show get found by others and helps us attract great guests as well. So thank you so much for joining me, and we'll see you next week for another episode.